Right. So we're going to talk about the main theme for today, which is how Excelsius can help you stay in line when it comes down to identifying the market's direction and at the same time noticing when you can expect shifts or continuations of market's momentum. And so when taking a look at Excelsius, Excelsius, as mentioned before, comes with a full line of tools that are designed to really help take your trading to a whole nother level. Now, the biggest thing to be mindful of is that each tool is designed for a specific aspect of market in and of itself. And more importantly, when it does come down to the ultimate benefit of the individual. Now, today's main theme that we're going to be talking about comes down to how to ultimately identify market's direction, one, and secondly, more importantly, making sure that you're staying in line when it comes down to Excelsius and how Excelsius can help you make sure that you're looking for those continued opportunities when it comes down to market's direction. And so when we're taking a look at this, and as mentioned before, Excelsius comes with a full line of tools that are ultimately there to help you take your trading to another level. The tools that we're going to be utilizing for today are the rejection zones, market structure candles. These tools are phenomenal when it comes down to assessing direction and, more importantly, attempting to identify shifts, continuations, or just overall ranges. We'll go through each of the tools real quick just to give a brief overview on them, and then we'll take a look at different examples in context to market's direction and making sure that we're utilizing Excelsius to the fullest extent to really help us make sure that we're looking at direction in the proper way that we need to be. Starting off with the rejection zones here. The rejection zones are a tool that we had implemented in Excelsius here that ultimately help you identify the highs and lows of market structure. They give indications of where you can expect tops and bottoms, and more importantly, expect deceleration and exhaustion within price. Now, it's incredibly important to be mindful, and we stress this a lot. You are meant to be in the driver's seat. Excelsius here is meant to simply provide you that additional confluence when it comes down to your trading, provide you that additional data that you would need unless you would be an institution. That is what Excelsius is here to do. And so while in certain instances, it may look super clean and super, clean in that regards, the best way I could put it, it's incredibly important to be mindful that you still want to make sure that you are adding your analysis into what you are doing when it comes down to moving with Excelsius. Now, the rejection zones, just like any other tool, are completely adaptable to any time frame. Just because we're pushing or nowhere near a potential rejection zone here on the daily time frame, if we do drop down into the 1 hour time frame, let's say, you'll see the rejection zones will completely adapt to that given time frame, and that very much stays true on every single other tool. As mentioned before, the rejection zones are verbatim on what they're titled. They're meant to indicate when you can expect price to reject, when you can expect price to decelerate or exhaust. More importantly, for price to assess highs and lows, tops and bottoms, or ranges. And so the applicability when it comes down to building games plans with this are absolutely endless, solely for the fact that the rejection zones, if used properly, can really help build some incredible positions in the short term and long term. More importantly, however, and this is what we stress time and time again, you need to be mindful of what is going on in the entire basis of the market. And this comes down to one of the two main tools that we utilize when it comes down to identifying market's direction. You take a look at this example here on AUD CAD. Here we are sitting on the 1 hour time frame in the lower part of the rejection zone band, giving us indication that, hey, we could be expecting some type of deceleration or exhaustion, but at the same time, is that the time that we should really start expecting some type of bullish movement? Now, the biggest thing before even putting any types of thoughts or ideas is we really want to make sure we're taking a look at the higher time frame here. And what we can definitely see, no question about it, is that market momentum is no question descending. And more importantly, however, every time we do push into these smaller parts of the rejection zone, this first part of the band here, we are seeing some short-term pull-offs. We are seeing some short-term decelerations, but nothing too significant that's really pushing into these upper part of the bands, any of these major areas that is representing markets structure. And so this in and of itself becomes incredibly important, but also shows how super cool Excelsius is when it comes down to the adaptability aspect, because just because we're sitting in that 15-minute lower part of the band, it's not necessarily to say that price is going to just reject straight off. We have to go back and we have to be mindful of what is going on in the longer time frame. And so when we do see something like that, we're simply just asking ourselves, what should the bias be for the short term and the long term? When we drop back down into that time frame that we were working in, that 30-minute or the hour, whichever one we were in, ultimately we're saying to ourselves, yes, maybe for the short term, if I would like to set some type of play up here, seeing prices starting to decelerate or exhaust or bottom out, maybe I could look for some type of short-term long. Once again, the key words that I'm saying there are short-term, because the rejection zones are giving you indications on the higher time frames, whether we go to the 4-hour or we go to the daily here in the end of the day, that you can see that price overall is still very much descending and has been descending for a very long time. And so this is the biggest thing that the rejection zones can help, is simply identifying where market's momentum is in the short term, in the long term, and you can really just see how well price does move off when we do near these points. Now, be mindful, however, of the movements in and of itself. Sometimes the movements are short term, sometimes the movements are long term. These short term movements versus these long term movements are solely dictated by, once again, where the majority of the direction is in markets structure, in markets direction. And so the rejection zones provide a phenomenal overview when it comes down to assessing the direction, solely because it's really giving you that guidance from any single time frame, that what you need to be mindful of and what you could expect. As mentioned before, just because we're decelerating or exhausting in the 1-hour time frame, that doesn't necessarily mean that now we're going to expect this grand move because price is pushing into a 1-hour rejection zone. We still want to make sure what is going on in the higher time frames. However, that doesn't mean that you can't go ahead and try to build some short-term plays. And so this in and of itself is an incredible feature when it comes down to identifying short-term and long-term movements and what you need to be mindful of. Now, secondly, after the rejection zones, the main other tools that we want to really look at when it comes down to this theme, to this topic, is the market structure, and more importantly, the market structure candles. Now, the market structure, for those that do not know, are a super cool and unique tool that ultimately identify the most key and sensitive points of the market, and also identify the highs and the lows of the most recent movements that have taken place. Now, what you will see here is that the market structure setting here is extremely dynamic in context to how it moves, but more importantly, it does really allow for assessing direction when read properly. Let's take a look at this most recent example here. What we can see here right now is that market is definitely trending downwards. We know this is to be true as well because the most recent movement that had taken place had successfully broken down on this previous low point here. And so by doing so, it gave further indication that we can expect this trend to continue downwards, and that is precisely what we are seeing. And so as this statement would stay true, that is simply what we are saying on here as well. If price successfully continues to break this low, we could definitely expect a further continued movement. And if price can start to successfully break this previous point of market structure, this lower high, we could potentially expect some type of short-term shift of this descending direction. A phenomenal tool that's not just helping you identify where these key and sensitive points are, but they are at the same time providing you potential opportunity to look for those continued or shifts of market's direction. Now, the biggest thing to be mindful of when it comes down to market structure, when you do set the market structure settings, is that you want to take a look once again what is happening on the higher time frames. Just because you drop down to the minute time frame here and you see some type of higher low or lower high being broken, that's not necessarily indicative that you can expect this grand move. Once again, you need to be mindful of what is going on the higher time frames that ultimately tell you what you can expect in context to the size or sheer volume of the movement. The higher time frame point you break and the more significant of a movement you can expect, the lower time frame point you break and the shorter of a significant movement you can expect. However, we want to take it one step further, and we added what is known as market structure candle settings, which ultimately allow for the candles to transition or turn into the actual structure that is attempting to be developed, or the direction or overall bias that the market, or Excelsius in this matter, currently has. In this case here, and as mentioned before, what we can see on a directional standpoint is as follows. Price at this current moment is bearish, no question about that. solely because we did just recently break these previous low points. And so until price successfully now breaks through this past point of market structure, the bias remains bearish. And that really provides so much clarity in context to those who are looking to trail positions, for those who are looking to manage positions, solely because now you have a plug and play tool that is really providing you with that additional insight on, has market shifted yet? Should we be expecting any type of short-term correction, or should I be staying in the position that I'm in? This is an absolute massive tool, not just because of what it does, but because of how adaptable it is. And I can't stress that word enough, adaptable to the time frame in which you're working on. Just because on the daily you're waiting for such a larger point, that doesn't mean that on the smaller time frames, let's say whether on the 4 or if we drop down to the 1, that you can't be looking for those entries in the smaller time frame. However, I will reiterate once again, the smaller time frame of a point you break and the less significant of a movement you can expect. The higher time frame of a point you break and the more significant of a movement you can expect. This is key. And it goes back down into what we talk about time and time again, which is this is a balancing act. Just like we want to make the market work for us, we want Excelsius to work for us. We don't want to be working for Excelsius. The combination between the trader and Excelsius genuinely breeds success. I can't express that enough. And so the market structure settings are an absolute incredible and wild tool, because not only do they identify the most key and sensitive points, which you can expect some type of orders to be placed, not only do they assess market direction as they're telling you the attempted structure that's being developed, but they also make sure that you're in line with what's going on in the bigger picture. As mentioned before, in the event that we break these lower highs and market turns bullish for the short term, that doesn't mean that now on the daily time frame we've completely changed the direction. As you can see here, we need to be breaking through this key sensitive point for any type of real major shift. And this goes back down into the sole design and purpose of Excelsius, to be a complete customizable tool based on what you need it for, when you need it for. And now when you combine the market structure candles, and the rejection zones together, now you have a whole new aspect, a whole new viewpoint of direction. As we can see here, the rejection zones are giving us indication that every single time we push down into here, we definitely expect some type of short-term shifts. However, they're very short-term once again, and it makes sense, as the rejection zone in its entirety is telling us that market's direction is very bearish and we've nowhere near reached these points. However, it also makes sense because we can see how well price is successfully rejecting these key points of market, which give further indication that market is bearish and that we can expect further continued bearish momentum until we could start to break down some of this past structure, which, if you want to go a little bit deeper, now really pertains to the context of how this whole game is a yin and yang, a context of buying and selling, a zero-sum game. For any type of shift to take place, you need to start taking out some of the other orders. Absolutely wild. I can't express enough the applicability with such a system is mind-blowing. Excelsius is genuinely designed to provide you with the tools that you need to not only take your trading to the next level, but to have an unfair advantage, just like the institutions have an unfair advantage on the retail traders. Excelsius is here to take over. And just by showing you legends 2 tools, notice how it completely changes your viewpoint when it comes down to assessing direction. The rejection zones, the market structure settings, those 2 combined not only take your ability to assess direction to a whole new level, but your ability to manage direction to a whole new level. Excelsius is here to take over. I can't express that enough. And so with that, that concludes today's live. We took a look at simply 2 tools and simple 2 applications that you can apply when utilizing Excelsius. The rejection zones and the market structure settings have numerous applications aside from just assessing direction in the short and long term. And that is the incredible aspect of Excelsius. Excelsius is not only ever growing, but the tools already in place have an immense amount of utility and application. Next week, we'll take a look at a new topic and how Excelsius can upgrade that exact topic, just as we upgraded the ability to assess and manage direction today. Thank you all who showed up. As always, if you ever need anything, don't ever hesitate to reach out. You can get started at www.pinksand.co/Excelsius. Go and experience the advantage. Enjoy the remainder of your week, legends, and I'll speak to you all in the next live demo.